Be Wealthy and Smart, episode 838.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about why cryptocurrency is the future. Not just cryptocurrency, but digital assets. And don't take my word for it, because this is coming to us from billionaire Mark Cuban. Most of you know him from owning the Dallas Mavericks, or from Shark Tank, or maybe back in the day with Broadcast.com, the first online streaming sports company back in the internet days, when he sold his company for billions of dollars. One thing Mark Cuban knows is business and business trends. And that's why when I read his blog post, I thought it really was earth-shattering and something I needed to share with you. Because we often look to billionaires for wisdom, because who better to teach us about money than people who have made a lot of it themselves? Some people have made it in ways that maybe we can follow in their footsteps, depending on what they know, what they're investing in, what their strategy is. And Mark Cuban might just be one of those people. So I wanted to share this blog post that he wrote with you. It's quite lengthy, so bear with me. But there's so many nuggets in here of wisdom that I think will serve you for years to come if you really listen closely to this and take to heart what he has to say, because he really makes some great points. So he called this blog post, "The Store of Value Generation is Kicking Your Ass and You Don't Even Know It." Now, before I start reading this blog post to you, I just want to say that that title makes me think about the Wall Street Bets kids, or maybe they're not kids, maybe they're just people, everyday investors on Reddit, social media, but it is like a new generation of people coming against the old establishment, the tradition, the hedge fund managers especially, and those who have been going short against companies that have been having difficulties during the pandemic. And these shorts have been trying to drive these companies out of business. Companies like GameStop that I talked about on an earlier podcast, AMC movie theaters, Nokia, BlackBerry, and other companies. So this was my first thought when I first read that headline, but really Mark goes into a whole description about digital assets and really makes a great comparison to tangible assets. Now, tangible assets are things that we can touch and feel and things that we might be more used to in prior years. But he makes a good case for why digital currencies are the next up-and-coming thing that people might have just pushed aside and not seen how they can have real value. So think about that while I share this blog post with you. Here we go. Mark writes, "What is something worth? A building, a pen, a stock, a cryptocurrency, gold, intellectual property, any asset. Valuing something we own has always been more art than science. When I was a kid and started to collect stamps, I collected them because my mom had done the same as a kid. She turned me on to the history lesson that came with collecting stamps. Then when I got to be about 15 and started going to stamp shows to add to my collection, I quickly realized that there were inefficiencies in that market. The same stamp was selling for different prices at multiple stamp dealers at the same show. It didn't take me long to realize I could buy from one and sell to another. I literally bought a stamp for 50 cents from one stamp dealer and an hour later sold it to another dealer at the same show for $25. I quickly went from being a collector to being an investor, trying to take advantage of these inefficiencies and saving some money to help pay for college. Watching what has happened with Wall Street Bets reminds me of those days. There are inefficiencies and traditions in every marketplace that have become so ingrained by the power players that they literally think they are rules that most, if not all, participants will follow, until they don't. It often starts on a small scale. A kid finding discarded items, cleaning them up and selling them on eBay, turning this into a business. Or getting trading cards from somewhere, looking up the value online and selling them for more, turning this into a business. You'll love to see it. The path of finding inefficiencies has followed an interesting path from purely analog when I was a kid. You have to have something, go somewhere and sell face-to-face, or by mail, or use an intermediary like a broker, to using the internet and sites like eBay or other marketplaces to sell their physical goods. Now we are seeing the next step in that evolution. What happens when everything is digital? What happens when literally anything digital can be a store of value, including a share of stock? What is a store of value? It's something that some number of people assign value to and are willing to pay for and then hold on to, hoping that circumstances increase the value of that item. One of the most historic and visible stores of value is gold. Gold bugs would tell you that gold is a store of value because its history as the foundation for currency or actual use as currency. That it's a hedge against inflation. That it has intrinsic value because it's used for manufacturing and jewelry. It's all narrative. There are plenty of other precious metals that meet the same criteria, but gold has more buyers. When the number of buyers increase, the price goes up, and vice versa. There is nothing unique or special about gold other than enough people believe the story to buy gold. Trading cards, art, cars, stamps, and many other collectibles are also perceived as a store of value. One of the reasons they have worked as a store of value is they require physical ownership as proof of existence and confirmation of scarcity. We have a good idea of how many of most collectibles were created, and the physical presence of that good is confirmation that it's real. Most of the time, fakes obviously do exist and fraud is an issue. But for the most part, we trust the Picasso is a Picasso, and the Luka or LeBron rookie cards are real as well. Of course, those who collect them as an investment hope that their value will go up, and they very often do go up, leading to profits for those who own and then sell them. In the analog world, pre-blockchain world, they were the only game in town. But something changed over the past 3 years. Crypto enthusiasts will tell a different story, saying this has been going on since 2009. The blockchain has evolved to support smart contracts and the ability to uniquely identify digital goods and the transactions associated with them. What is a digital good that can be sold? Literally anything digital. If it can be generated and saved in a file format, then it can be defined as part of a smart contract. That smart contract can be powerful with plenty of if this, then that rules that allow for levels of control of that digital good, which in turn can define its availability or scarcity, what happens when it's sold, whether ownership is conferred, and my favorite and what I think is possibly the ultimate game changer, whether or not future sales pay a percentage of every sale to the person or company who originally minted the digital good. Because of the intelligence assigned, stored, and maintained decentrally via the blockchain, with no one party in charge of the transaction and miners competing to confirm the transaction, blockchain-driven assets have now legitimately become stores of value. This digital store of value isn't limited to digital goods, of course. It has long included cryptocurrencies. Crypto assets is what they should be called. They are rarely used as currency. Like Bitcoin, Ethereum, and so many others, along with the tokens being created to support DeFi and other value-creating derivatives of crypto assets. They all are stores of value, with market cap leader Bitcoin having a decade-plus long history of transactions and wealth generation. To so many, the idea that a crypto asset could be a store of value is crazy. To them, there is no there. There is no intrinsic value. To them, it is a digital representation of nothing that crazy people are paying good money for. That is not the case. Old schoolers say that you need to have something tangible in order for there to be value, and we will deal with fraud after the fact. If we can touch it, see it, or hear it, it is real and can have value. They begrudgingly realized there was value in digital music over CDs. The new generation that has grown up in a digital world has known their entire lives that what has been of greatest value to them has been digital. This generation knows that a smart contract and the digital good it reflects or a crypto asset are a better investment than old school see, touch, and feel uses. It took me collecting stamps and baseball cards to truly understand why this is true. When you collect stamps or cards, you have to worry about getting them graded. Is it mint condition, or you have to store them and maintain their current physical state? You need to protect them and keep them safe. When you want to sell them, you need to physically deliver them, which entails considerable risk during shipping. Because much of the industry is person to person, there are a variety of other risks and costs introduced into the system as well. All of these are expensive, time-consuming, risk-increasing, and annoying. With the digital trading moment on NBA Top Shot as an example, you have all the fun, none of these risks, and the value is still set by the same laws of supply and demand. I get to enjoy knowing I own my Max Kleber dunk moment, along with knowing the serial number and much more. Some people might complain that I can get the same video on the internet anywhere, anytime, and watch it. Well, guess what? I can get the same picture on any traditional physical card on the internet and print it out, and that doesn't change the value of the card. And when I want to sell the card, NBA Top Shots offers a marketplace I can sell it in, which by virtue of the site being created on Flow blockchain, offers me the ability to see every Maxi card being offered, the serial number, its price, and more. All the foundations required for a consumer-friendly, efficient marketplace. But I do have to add that I don't know why anyone would sell a Maxi moment. Maxi is a top 10 defender in the NBA, just saying. With digital goods, I still have the same sense of ownership as with a physical good. And again, the value is still set by supply and demand. But I have none of the hassles beyond remembering my passwords and dealing with wallets, both of which are getting easier and easier. And the funny part is, if you're an old school physical good owner that wants to share what they own with someone else, what do? They take a digital picture of the item and send it or the link. Plus, there are tons of additional benefits of digital goods that are even more evident in the new and growing digital minting and marketplace destinations. Sites like Mintable and Rarible, where I have minted digital goods and offered them for sale here, and marketplaces that enable the sales of either curated or open-hosted digital art and beyond, like OpenSea, Nifty Gateway, Super Rare, or those like NBA Top Shot and Bitcoin Origins that create and mint their own or licensed content. The transparency is the biggest upside. I can see the history of every buyer and bidder. I can see what they own, what price they paid. For every digital good, I can easily see what the marketplace is for any digital good. Crypto Slam is a great example of this, and I can transact in minutes or faster. When I want to buy or sell something, I just go for it and the deal is done. Plus, I need to add that the barriers to entry, while not non-existent, are far lower than traditional art and collectibles, opening the door for some incredible new talent to be discovered. It's the same with crypto assets. Yes, wallets can be confusing, but you can figure them out. And like your gold, your silver, your coins, your stamps, your cards, the value is set by supply and demand. For crypto nerds, the supply is set by the algorithms of the crypto asset. That's not to say the digital goods and crypto asset markets are perfect. They're not. Transaction costs can be high. The markets can still be moved by a few big players or whales. And like the markets for stocks and physical goods, the markets can be influenced by narratives that may or may not be true. But the bottom line is that there are a growing number of investors and traders who think that the digital goods and crypto asset marketplaces are better than old school physical markets, and the stock market, and most of them are young. They love the fact that no one has power over them, that there is no central authority, and they get the results of their own efforts without some government agency or big company effing with them. Every negative, consequential financial moment in their collective lives has been the result of some massive entity getting greedy and effing things up for them. On the flip side, they have also been watching some of their peers gain wealth with crypto and digital assets, most starting with not much capital. Those peers have also been very vocal about the lack of interference by old schoolers with crypto and digital assets, and much of those gains have come from all of them doing the same thing, buying and holding on for dear life. They have learned that with digital assets, acting in unison can bring wealth to those who otherwise would not have access to it. That is power, and they know it, and they are learning how to use it. So what does this have to do with Wall Street bets and GameStop and the other stocks they are trading? Well, it's pretty obvious that the Wall Street bets traders are applying the same principles of the digital crypto asset world to the stock market, and they are loving the fact the old schoolers are hating it. They know that Wall Street hasn't changed much in generations. Sure, it has gone digital in many respects, but the way the game has played has not changed. Wall Street is 100% top-down controlled and regulated. Which stock is next in the S&P 500? Which is removed? No one knows, but it is provocative and can change fortunes for investors. SEC decides to use their own in-house administrative law judges and prevent defendants from having their constitutional right to a jury trial? Yep. You can't afford to fight them. Big brokerages get to have calls and put out notes to their millions of clients with price targets in hopes of moving markets, but think it's wrong for subreddits to do the same. Yep. The ultimate in stock manipulations, corporate stock buybacks, were illegal prior to 1982 till the SEC put a former broker CEO in charge. Want to guess what happened to CEO compensation since then? Wall Street and the agency that governs it, the SEC, have become fat and happy. Fat and happy makes old school slow and resistant to change, very resistant, and obviously very unaware of the change that is happening around them, which leads to what they are missing and don't believe can or will happen. But first, here is what they do believe. They believe that no matter what, the companies that small traders buy or the digital assets they buy will go down in value considerably. They look at companies like GameStop, AMC, Bed Bath & Beyond, and understand what happens with the short squeeze and how that can force prices up. But as bad companies, the prices will come back down because that is the way pricing in the stock market has always worked. And there is some truth to that. That stocks of companies that go bankrupt are either redistributed to debt holders or fully canceled. Yes, there are other options, but these suffice. If the companies that Wall Street bets and other collectives of investors go after go out of business, their stocks become worthless as well. What they don't understand is that the collectives like Wall Street bets understand that completely and accept that risk. Put another way, the old schoolers think they are smarter. They are not. Now we get to connect the dots of how the store of value generation is kicking old school in the ass. This generation doesn't care what old school Wall Street thinks or says about valuations. They don't care about price earnings ratios or net present value of future cash flows or what the analysts say the earnings per share this quarter. They don't care at all. They have learned from their experiences watching Wall Street go up and down and making people who aren't them a ton of money that it's a game designed to reward the people with the most money. That all these narratives are just sales pitches designed to sell stocks, and they want to change that game and kick their ass, which they should and have every right to. A stock is just another digital store of value, and like the stores of value that have come before and will be successful for generations to come, the more decentralized the power, the more power that comes with the collective working together. Sure, every single person knows they can make or lose money from their trades, whether it's GameStop, AMC, Bitcoin, or other stocks. Sure, there are people who are in unfortunate circumstances and risk more money than they should, but there is zero difference between them getting and following advice from Reddit or someone on CNBC or Bloomberg. They also know that the more they work together, the less power Wall Street has. They know that fat and happy Wall Street has become slow, stale, and set in their ways, which makes them an easier target than anyone would expect. They, as a group, can target any hedge fund, any stock, any time, for any reason, and change the game. No different than a major Wall Street analyst making a major call can move a stock by getting their whale followers or clients to buy or sell. Now Wall Street Bets and the people who follow it, the collective, can do the same, but with much more power and impact. This doesn't have to be a negative target. It can be absolutely positive. Push up the stock of a company that has a strong social mission they support. Push the stock of a company that offers equity to their employees at the lowest level so they can sell into the market and gain wealth. Take significant positions in a company and act as activist investors. No, they won't be able to do this with 100 companies at a time, at least not for a while. They don't need to. Being able to have an immediate impact on something that is of significance and importance to them can be amazing and great for this country. However, this is exactly what Wall Street hates and will fight because it moves the power out of their hands. This store of value generation isn't looking to break laws. They are looking to break the system that has created challenge after challenge for them. To move out the people who have ignored them and continue to dismiss them, and to move in people who understand what they want their future to be. Every generation in this country has had its unique special power. This store of value generation has found at least one of their special powers in financial unity. We, as a country, will be far better off if we understand them, respect them, and learn from them quickly. And Mark signs it, as always, tell me where you think I'm wrong. Well, there you hear his full blog, and I will put a link to it so you can take a look at it. His URL is blogmaverick.com. I think it's very insightful. There's a lot of pieces to this, but it's something I'm going to chew on for a while and come up with some of my own thoughts about it. But I wanted to share that with you and see if it wasn't something that would make you do some more thinking and see Wall Street in a little bit of a different light as well. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.